Hi, my name's Andrew Penkethman and I'm the Managing Director and CEO of ASX listed Ardea Resources with the ticker code ARL. Ardea are focused on the Kalgoorlie Nickel Project, which is the largest nickel-cobalt resource in Australia and one of the largest in the world. It's a globally strategic asset and we are currently working with our Japanese partners Sumitomo Metal Mining and Mitsubishi Corporation to develop Australia's next large-scale, long-life, competitively priced nickel-cobalt operation.
Andrew, good to see you again. So, right, obviously, lots going on in the nickel space. It's been a tough couple of years at the moment. Let's maybe review the market as you see it. Is it a good time to actually be a nickel company? So, what's happening out there with nickel?
Look, from a nickel price point perspective, it's the ideal time to be advancing our studies and looking to develop a very large strategic nickel cobalt operation. We've got very good access to skilled staff and key service providers, and within Kalgoorlie Nickel Proprietary Limited, which is the incorporated joint venture vehicle, we've got a staff base of 50, and then we're working with specialist expert service providers right round the world to make sure we've got the appropriate skills incorporated into the definitive feasibility study. So from that respect, it's a really good time. However, we note the current challenging nickel sentiment, particularly here in Australia, on the back of a number of operations being placed into care and maintenance or going into voluntary administration over the last 18 months or so. But with that backdrop, we are arguably one of the only nickel stocks in Australia, or if not the world, outside of Indonesia, being meaningfully advanced.
Well, let's talk about this. Obviously, moving into DFS, which is, I say, probably puts you at the head of the pack at the moment, ex Indonesia, or de facto China. For this, we're seeing lots of conversations in the US. I think MP Minerals are a beneficiary of some moves there from the Department of Defense and also Apple, I think. How are you viewing this kind of critical minerals, especially for the kind of the battery metals? The shine seems to have come off somewhat, but is there still a market there?
100%. So I think the good analogy is that the energy transition's currently going over a speed hump. Things have slowed down slightly, but the energy transition is still progressing. There's been so much work and expenditure and commitments made right round the world, particularly from Australia and key ally nations, Japan, Korea, United States, Europe, India. So I think we're very well placed. The demand for nickel, for example, we've got traditional uses such as stainless steel with very strong compound annual growth rates, and then electric vehicles, large-scale energy storage. So the thematic and demand for nickel, it's just paused very slightly, but all the independent expert research houses are forecasting the nickel growth at unprecedented levels, and we feel our timing to get into production around 2029 is very well placed with a forecast uptick in nickel price, with the market expected to move from the current surplus back into deficit.
Right. Now, obviously, you're moving into a DFS. That's going to require different sort of funding from traditional sort of exploration development funding. You're going to move towards having to get this thing built. So, is there interest from the big players? Obviously, you've got Sumitomo and Mitsubishi involved here. Does that make life easier for you when you think about funding a build?
100%, and that was the key reason for Ardea spending several years on running a strategic partner process. And in my view, we've been able to attract and formalise a very strong working relationship with two of the best partners in the world in Sumitomo Metal Mining, with their nickel laterite and processing expertise, and then Mitsubishi Corporation, very much a household name, and they've been involved in developing very large-scale resource projects right round the world, and a great supporter of the Australian resources sector for about 60 years now. So they bring both the technical expertise but also help provide the funding. So at the moment they are contributing with the Japanese government 100% of our definitive feasibility study with a budget of $98.5 million. And they will also work very closely with Ardea on our funding strategy for future work streams and project development. And it's no secret with their strong links to export credit agencies around the world, and in particular the very large export credit agencies out of Japan that traditionally have provided some of, if not the cheapest, project development debt in the world. And from Ardea's perspective, we've also been spending a great deal of time working with our key stakeholders at a local, state and also federal level, so with the likes of Export Finance Australia.
Well, let's look at that, because I think there's a connection here between valuation and what they're spending. You mentioned a number there, 98.5 up to 98.5 million bucks on the DFS. That's them funding it, not you. Yet your market cap is around 90 million bucks at the moment. What are people waiting for? What are they expecting from you? Maybe what are the kind of limiting factors that people may be perceiving on this relationship? And what do you think they should be thinking about that agreement that you've got with Sumitomo and Mitsubishi?
Yeah, I'm not sure a lot of people appreciate the significance of our collaboration with the Japanese consortium. And personally, I see the Kalgoorlie Nickel Project a key collaboration between Australia and Japan, and every bit the key example for critical minerals collaboration. There's been a great deal of talk right around the world on critical minerals and the energy transition, but this is a real example of that talk being put into action and genuine progress being made. So I feel some people are underestimating that this project is moving forward. It's real, and with the quality of our partners, the funding speed hump can very much be overcome. That's the whole reason we ran a strategic partner process, and since announcing our collaboration with Sumitomo and Mitsubishi, we've had a number of very large organisations right around the world involved in the energy transition, from lithium-ion battery manufacturers, OEMs and other large mining houses asked, what can we be part of the collaboration? So we see that as a huge independent endorsement in the Kalgoorlie Nickel Project and the Ardea team.
I had a whole bunch of technical questions lined up for you with regards to the kind of metallurgy and processing and resource modelling and mine planning. But I think what I want now, having heard what I just heard, I want to understand this commercial component. Okay, so Mitsubishi and Sumitomo, how long have they been involved? Because I'm trying to work out if they are a validating factor, if they've had the option to opt out at various points, but they're still here, what that tells me. So how long have they been working with you?
Look, for several years now, and anyone that's worked with the Japanese in the past knows that that they are notorious for very detailed due diligence, but it takes time. You have to be patient, you have to be collaborative, and of course you have to be completely open and honest. And of course we are, but you have to undertake due diligence on literally every level. The technical aspects of the project, in the governance and systems and procedures set up within the organisation. I think it's a tremendous independent endorsement for both the project and Ardea, and the level of collaboration and due diligence is exceptional. I've had the privilege of being involved in some very large resource projects and help lead strategic partner processes before. So the level of due diligence is not new, But the level of detail from our partners, yeah, were really quite exceptional.
Okay, so I'm trying to work out why people are maybe perhaps discounting this stock. So you've got 98.5 million bucks to fund the entire DFS from these two partners who, as you say, kind of bring technical expertise and they bring access to funding as well. But they're still here despite having options to kind of opt out at various points. It sounds like an endorsement, right? But what is the deal structure? Are they taking away all of the good stuff? What are you left with at the end of this when this thing gets funded to, well, one, the DFS comes out, and two, you kind of work out whatever the funding mechanism is?
So the incorporated joint venture deal structure was our partners earning a 17.5% interest upon funding 50% of the DFS, and that's recently been concluded. And there was a ASX announcement in early July on that milestone being achieved. Once the DFS has been concluded, they'll be issued another 17.5% stake to take their interest to 35%. And the key 15% to take them up to 50% is when they make a final investment decision. And to make that final investment decision, we need all our approvals in place, but most critically, we need the funding secured. So, with our partners' track record of success, it shouldn't be any surprise to anyone that they'll be key collaborators in that entire funding strategy, and presumably linked to us being able to access some of the most cost competitive debt in the world to see this project developed.
Okay, so FID, you've got 50% because the funding structure will be in place. You'll have some equity to raise, some debt to presumably to fund off the back of that, and they'll do their piece. Like, what's the end goal for you in terms of what are you left with? How would you what would you define success as looking like after actually getting the funding in place and be ready to build this thing? And what, again, come back to what should your shareholders be expecting to see, and what should they be pleased to see?
Look, we've maintained great deal of discipline in our capital structure. Ardea's been around since 2017 when first listing on the ASX. We've still only got 210 million shares on issue. The board and management team are shareholders. Our interests are incredibly aligned with all of our shareholders. We're very focused on continuing that discipline and making our shareholders proud, and most importantly, being able to succeed in developing and maintaining a meaningful stake in a globally significant nickel-cobalt producer, and ultimately being able to pay dividends and reward our shareholders with both those payments and the revaluation and uptick in our share price.
Okay, so what have you got to do between now and FID in terms of things like lead agency status approval, native title agreements for Goongarrie Hub and Borefield corridors, all those kind of, I guess, in the nicest possible way, kind of admin things which need to be in place before anyone can start thinking about building this?
So in the coming months, we anticipating having our major project status renewed by the federal government. So we were granted that in 2022, and that's a federal government, I guess, support for the project. So again, it's another piece of independent endorsement that's valid for 3 years. So we expect our renewal to come through. As you mentioned, we're in the process of applying for lead agency status with the Western Australian state government, and both those assist with expediting approvals or any challenges in the approvals process. You've got dedicated people to go to who will help facilitate and manage any communication with key stakeholders, both within government and external to government. We'll have DFS deliverables. We've got some upcoming drilling results from Goongarrie South. There'll be other metallurgical and test work updates for the definitive feasibility study. We'll be lodging our approvals currently targeted for Q1 2026. So a great deal of work underway, steady news flow, and it continues to demonstrate the project's been advanced and significantly de-risked each step of the way.
Okay, and where do things like the kind of regulatory approval timelines post DFS fall in terms of the funding? DFS is funded 100%, but how much cost are you as a company incurring outside of the DFS funding, pre and post DFS, and have you got the money to do that?
So with our last quarterly report as at the 30 June 2025, we had approximately $14 million on hand, no debt. If you look at previous quarterlies, our current burn rate is approximately $500,000 to $600,000 per month, so approximately $1.8 million per quarter. We are well funded. We will have to contribute 50% of the project funding post DFS, and we're having detailed funding strategy meetings with a range of stakeholders on that. And we've got a number of options available to us, and we're currently defining what we feel will be the most advantageous options to pursue in the best interests of all our shareholders, and obviously that's linked to minimising the issue of additional equity and maintaining that tight capital structure discipline. It's an absolute company.
Okay, so it sounds like things like assessing risk around groundwater and tailings approvals, that's within the DFS, but you've kind of got some works that you've got to finance yourselves. So the burn rate is obviously is I'm going to go against all relatively, but relatively insignificant. It doesn't sound like you're picking up the cost of too much pre DFS, but post DFS, do you think that would you expect that to rise? And what exactly are we looking at there?
Yeah, we're having those detailed discussions at the moment, Matt, and looking to define the best option moving forward. So importantly, we've got a range of options available to us, from conventional equity market support. We're pursuing some potential opportunities for government support. We've seen moves in the United States through floor price for critical minerals being defined, and the MP example is a very good one. We've seen discussion from the Australian federal government on critical minerals stockpile and potential resources and reserves. So we're having those discussions, and we're keeping an open mind to define what we feel will be the most advantageous strategy for Ardea.
Right, and again, just helping me understand the type of company I'm investing into. Obviously, with Sumitomo, Mitsubishi involved, and rising to potentially 50%, and not too short order. Are you guys going to stay in this thing to get this thing built out, or are you builders, or is that again offloaded to your partners to do technically and otherwise? Would you look to sell your stake, or given the long, I guess very, very long, was it 40-year, I think 40-year mine life on this thing, would it make more sense to kind of hang on to this thing and have it as a sort of cash producing, cash generative vehicle? How do you view value and exit?
We know with a 40-year ore reserve, and that's assessing only 6 of 9 mineral deposits. So in reality, we expect this project to be going for well in excess of 50 years. And through such a long mine life, we anticipate to see several cycles in the nickel commodity price, and obviously we will get a very strong byproduct credit from cobalt, and also potentially scandium in the future as well. When the prices are high, we expect the project to be incredibly profitable, and we're keen to maximise our exposure to those profits in the future. So we're currently having those discussions on terms of, well, how does Ardea fund its share moving forward? What's most advantageous for our shareholders to be able to maintain a meaningful stake in this project with such a long life, and to be able to reward the loyalty of our shareholders.
Okay. Well, I will tap into a couple of the technical questions. We're just trying to understand, because it sort of helps me understand how you're evolving from PFS to DFS on the bulk HPAL tests completed so far. Are you seeing better recoveries? Is that going to be reflected in the DFS? Or what challenges have kind of arisen from the test work?
So when we completed the PFS on the 5th of July 2023, we've had a 70-minute resonance time, and we've been undertaking a great deal of metallurgical test work in addition to that completed in the past as part of the definitive feasibility study. So we're currently assessing both the HPAL operating temperature, the acid consumption, and the recoveries. Results thus far, broadly in line with the PFS, and we'll be providing a detailed update once all that work's completed and compiled. But we've seen from other operations around the world, the general operating temperature for your autoclaves is about 250 degrees Celsius. Our test work has included looking at 255 and 260 degrees Celsius, and what we know from other projects is that generally the higher the temperature, you tend to see higher nickel recoveries and reduced acid consumption. Now, with acid being the largest cost consumable for all HPAL projects, obviously any opportunity to reduce your acid consumption is very advantageous, and that's one of the current differentiators for the Goongarrie hub as compared to most of our peers. We already know, and we've demonstrated, that we have very low acid consumption, but if we can look at elevated HPAL temperature to reduce that even further, we anticipate some operational advantages, and we're having discussions internally as to, well, where do we go from here? What's our base case? Do we consider optimization work as well? So obviously we want to deliver a project that can be cost competitive and ideally in the bottom cost quartile, and we demonstrated that was the case with our 2023 PFS, and we're keen to back that up with the in progress DFS.
Okay, and what about, you mentioned last time around the neutralizer, in terms of the risk around supply continuity there, internal versus external sourcing, how's that advancing?
Yeah, we're also completing a number of neutralisation tests and looking at things like the optimum grind size and linked to the acid neutralisation capacity, but sourcing neutraliser from the same open pits from which we source the nickel laterite ore is still very much part of our base case, and we feel that'll contribute to cost competitive OPEX and also lower CO2 emissions, because we're not having to have a separate, for instance, limestone quarry, or having to transport that material hundreds of kilometres to site. For instance, in Australia, a number of projects in WA source lime sands from the Esperance region on the south coast of WA, and that's several hundred kilometres from site. But if we can secure that material from the same open pits, proximal to the process plant, it's a big operational advantage for us, and that's very much part of the DFS base case.
Okay, and obviously with with your partners involved with Sumitomo and Mitsubishi, a lot of technical input here. But when you're sort of looking around the market as well, and you're sort of looking at some of the challenges, murmur and ramp up, are there lessons to be learned? Are there opportunities in the way that you're kind of structuring the DFS?
Yeah, no, it's a great question, Matt. We've spent a great deal of work and time looking at projects that came before us, and similarly the most successful operations. And if we look at the Chinese move into high pressure acid leach technology, that took 7 years working on the Ramu project in PNG. Most conventional or Western companies, how do you have the working capital to ramp up over a 7-year period? And then they've implemented those learnings with great success in Indonesia, but we've already got a partner in Sumitomo Metal Mining who's delivered 2 successful HPAL projects in the Philippines that both achieved over 100% of nameplate capacity in under 12 months. And we're very keen to replicate that success by bringing on their expertise, but also incorporating learnings since both Coral Bay and Taganito were developed by Sumitomo in the Philippines. So we're looking at using the latest technology, and a lot of the changes now, you mentioned the Murrin project owned and operated by Glencore, also here in Western Australia. A lot of those components are off-the-shelf technology now, like the autoclaves, the pumps, and other key materials of construction. So we saw from Moa Bay, developed in Cuba in the late 1950s. HPAL technology's been around that long, and the current technology is significantly de-risked. So we do very much expect a successful ramp up, both from the benefit of our own research and learnings from other projects, and again we've got specialists, guys like Mike Miller and Michael Rodriguez. They both got decades of experience, predominantly in nickel, and have been directly involved in projects like Murrin and Ravensthorpe. They know what works, they know where the challenge and pain points have been, and also obviously with our partners Sumitomo and Mitsubishi, we feel we've got a terrific range of skills and experience to make sure the project succeeds.
Tell me this, Andrew. In terms of what do Mitsubishi and Sumitomo walk away with in terms of offtake, for instance, and what kind of certainty does that give you in this market?
As part of the cooperation agreement and shareholder agreement that we executed with our partners, they have access to 75% of the offtake for life of mine from the Goongarrie hub. And we always had to place at least 70% of the offtake with well-regarded partners to be able to access the most competitive debt terms from banks. And clearly Sumitomo Metal Mining and Mitsubishi Corporation are considered top quality offtake partners. And then with the remaining 25% of the offtake, we're currently considering running a formal offtake process. We've certainly received a great deal of interest in that product, and with a plus 40-year mine life expected, we see this as having significant value for Ardea and obviously the KMPL team. So we're just considering the best options open to us, but needless to say, there's a great deal of interest in that remaining offtake.
Okay, so that's a great kind of annuity stream of cash, or certainty around cash flow going forward. In terms of your ability to have competitive conversations around preserving and protecting your margins, though, when do those conversations start, and where does that control, as it were, come from for you?
Yeah, we're having those detailed discussions with our partners and other interested parties as they approach Ardea, and we're considering the timing to initiate a formal process. And as I say, great deal of interest, and it's just a matter of defining, well, when's the optimum time. We both know that the current sentiment for nickel's a little bit challenging. The price seems range bound at about $15,000 a tonne, but despite that, people know the outlook for nickel is incredibly robust, and hence a great deal of interest in that remaining offtake.
But the contracts, the term agreements, if you will, that will be flexible and variable, depending on market conditions. Is that right?
Oh, look, absolutely. And one thing in particular with the Japanese, they've been investing in Australia heavily for over 60 years, and they're very focused on win-win outcomes and commercial terms, and things like offtake being completed at arm length basis on competitive commercial terms. There's none of this transfer pricing and trying to be too clever and avoid tax. And I've been to a number of Mitsubishi Corporation events here in Australia, for instance, and quite proudly the Australian managing director gets up and demonstrates the tax that Mitsubishi have paid here in Australia and their contributions to the Australian economy. And I just think it's exceptional. So it's a big part of our reasoning behind selecting our partners, because they're very good corporate citizens and they've got a track record of contributing significantly to the communities and nations within which they operate.
Yeah, no, that's not lost on me. Like if I look back to companies like, I think Horizonte Minerals in Brazil, obviously they struggled to get the financing in place for the HPAL project over there. You've got partners that bringing the capital, but bringing the know-how and experience of having built these things, because it was always an issue of, sometimes the costs run away with you if you don't know what you're doing, and then ultimately they don't necessarily work either. So, yeah, like I say, that point's not lost on me. Well, like Andrew, it's sort of kind of keep this very sort of commercial rather than getting into the technical, where are you conversation. Maybe just finish off. So the DFS is expected when?
Yeah, so currently scheduled for completion late 2025, coming up towards Christmas. So it's going to be a very busy end to the year.
And then they kind of say what from that? All right, it gets delivered. The numbers are presumably PFS or better, with more certainty over the cost structures. And then what's the process after that, moving through to kind of production profile?
So we're looking to incorporate an approximate 12-month period for front-end engineering and design. And one of the DFS deliverables is the detailed feed scope. And that will take the level of engineering. So our deliverable in the coming months will be the Class 3 DFS, and commonly you've got a level of engineering of about 25 to 30% with the 12-month feed phase. But as I say, the feed schedule and budget is a DFS deliverable. You take the level of engineering from that 25 to 30% mark up to about 60 to 70%, and it significantly de-risks the project. And we've seen a number of peer projects, both here in Australia and overseas, rush to market. And, sometimes you've got to go slow to ultimately be able to go fast and most importantly succeed. And we feel that the feed component will be very important for the success of this project. And similarly, while the feed and the detailed engineering's occurring, you've got your approvals process happening in tandem in the background. So ideally, when you complete your feed phase, your approvals are granted and you're ready to make a final investment decision. And obviously, in tandem with all that work, you've got a lot of detailed funding discussions. And we're also already talking to a number of export credit agencies. And as the DFS gets closer to completion, we expect those discussions to accelerate.
Well, look, it's exciting times for you. I think that it's interesting that there's not too many other nickel companies at where you're at the moment, or even close at the moment. It's been like I say, been a tough few years, certainly in terms of raising capital and getting funding in place. So appreciate your time, Andrew. Keeps in touch. Certainly as you move towards that kind of PFS delivery towards the end of the year, come back on and let us know how you got on. Okay.
No, great to catch up. Thanks very much, Matt.